How can CFDs be used to gear or hedge your portfolio? You might consider gearing to increase the value of your long-term investment portfolio. You can do this by moving some of your positions into CFDs. For example, say you have 10 positions. You sell a small percentage of each holding to buy CFDs of the same 10 shares, essentially converting a small percentage of your portfolio into CFDs. The impact of gearing would result in CFDs increasing your exposure to the same shares without needing additional cash. Be warned, selling your entire share portfolio and converting into CFDs would add overall risk. Only a small portion of your portfolio should be converted into CFDs in order to manage that risk. You have 10 shares valued at 10,000 Rand each, making for portfolio value of 100,000 Rand. You then sold 10% of each position and put half of that amount into a CFD. This would give you overexposure to the shares to a value of 13,000 Rand each. You have effectively geared the portfolio of CFDs and shares 1.3 times. Note, we're not taking any costs into account here. If you sell 10%, this is 1,000 Rand per share. 500 Rand goes into a CFD. At 7 times gearing, the CFD gives you exposure of 3,500 Rand. Add this to your 9,000 Rand left in shares and the 500 Rand in your CFD account left for margin calls, and you've turned your 10,000 Rand into 13,000 Rand. The CFD portfolio requires more active participation and attention than ordinary long-term investments. Remember, unlike an ordinary equity portfolio, it is possible to lose more money than you started with. In addition to trading with money you can afford to lose, you have to keep a close eye on your exposure. You can also use CFDs as insurance for your portfolio. This is called hedging. Hedging is a way of protecting your capital by taking an opposite position to what you hold in your long-term portfolio. If, for example, you're concerned that the price of your favorite long-term share might fall, you could mitigate this risk by taking out a short position in the share. For example, if you hold 350 shares, you would short 350 CFDs in the same share. Any losses in the one would be offset by profits in the other. You have basically locked in the current share price. You could also hedge an entire portfolio by shorting a relevant index. Here you'll take the long-term portfolio value and enter a short position with equal exposure via an index. It is important to use an index that reflects your long-term portfolio. For South African portfolio, you would use the SA40 index. Refer to our video on long and short positions. While there is no risk-free way to invest, the right hedging strategy can protect your portfolio from losing too much money. Speak to your CFD provider about the best way to hedge your long-term investment portfolio. To learn more about CFD trading, go to ig.com/seminars to register for one of IG's free events.